Hey everyone, this is Rob and I'm back with another update on cryptocurrencies. Today I wanted to talk about the ungracious fall of cryptocurrencies during 2018. I had written several articles on this before and done a couple of pieces in the series on cryptocurrencies here on this channel about what I thought about the cryptocurrencies in general and where I think they're headed. To sort of encapsulate that real quickly, I think that cryptocurrencies are a step on the way to having some sort of digital cash system. I think that they're not there yet for reasons of they can't handle the transaction volume, cost too much power energy-wise, a lot of them, and they have very deep security concerns and integrity of the data of the ledger itself concerns right now in their current state of implementation. So even though they continue to expand, a lot more get released, I think we're moving into a new phase of cryptocurrencies, which I think will be led by things like Hashgraph and other types of general ledger systems that actually afford the speed that we need, better security, and things like that. And I don't think we're quite into that third generation of online cash payment systems just yet. So I think the market is starting to realize that, and cryptocurrencies have taken a pretty big fall. And so I wanted to take a look at the CCI 30, which is the cryptocurrency index of the top 30 cryptocurrencies by market capitalization. And you can see since January 1st, see if I can capture the price here, that's 1.7. It peaked in January at about 20,796, this overall index of the top 30 cryptocurrencies, and right now it's trading at about 45.99. That's, I believe, as of yesterday's close, 45.99. If we look at some of the statistics here on this webpage, the index is down 75% year to date. This month it's down 11.69%. And look at the high and the low. Look at this volatility. A high of 20,796 and a low of 2,695. So this is really big swing. I mean, the beta on this investment for cryptocurrencies, dwarfs anything that I've ever seen in general in the stock market, especially when you're looking at 30 different cryptocurrencies. That's just amazing. And you can see a lot of wealth lost from here to here. There was a long buildup to get to here, from 2015, about 3 years. And then in several months, we've retracted a lot of that. And this is a logarithmic chart. So even though it doesn't look like we retracted that much, we've actually have lost 75% from the 20,000 down to the 4,500. And as you can see, we're not that far from getting back down under 1,000 if it keeps going this way. General technical indicators, you've got lower highs and lower lows cascading down. It doesn't look like there's anything that's going to stop this progression. I don't see any head and shoulders or cup formations. You could call that like a little mini cup formation, which means we may range trade here for a little while, but the overall trend is down. So I don't see any chance for people really accumulating, pushing it back up into maybe the $6,000, $7,000, $8,000 range. I know I'd seen some prognostications from some market traders on TV that it would go back above 8,000 some point in this year. I'm not exactly sure if it really looks like it's going to do that right now, unless we see a really big rally overall in cryptocurrencies that make up this index. So that's an interesting development in the cryptocurrencies. We're going to look at some of the constituents. You've got Bitcoin, Ethereum, XRP, Bitcoin Cash, EOS, and the daily changes. Most of them are down for the day. XRP is up a nice 8.45%. Over here you've got Amisco, which is up 4.24%. You have over here Ontology, which is up 5.17%. So, but most of these are actually down several percentage points. It looks like Bitcoin's taken one of the biggest plunges, along with Tron and Zcash at negative 5%. Icon negative 2%, not too bad. So overall in the day, they're not trading down too bad. There's more red than green, but it's not a horrible day. And like I said, it looks like if you really zoom in here, it looks like the trend is slightly up within the last few weeks or so. But overall, the trend is decidedly down, and they've lost a lot of value. Now, why have they lost value? There's been a lot of actual occurrences over the year that have caused the value of these cryptocurrencies to fall. I won't go back and rehash all the problems. I think why this generation of cryptocurrency is probably not the long-term answer in terms of anonymous cash or a governmental fiat currency or a replacement for like a wire system or a credit card system or an online payment system. So I won't rehash that, but we'll just talk about other news that has caused the cryptocurrency market to suffer since its peak in January. So there was a New York Times story that came out about a study of University of Texas Austin researchers indicating, I'm reading this paragraph here, indicating the Bitcoin prices were manipulated last year when Bitcoin soared from 800 to nearly 20,000. The New York Times reports on the study explained that a concentrated campaign of price manipulation may have accounted for at least half of the increase in the price of Bitcoin and other big cryptocurrencies last year. So not just Bitcoin, but a lot of cryptocurrencies. The research conducted by University of Texas finance professor John M. Griffin and graduate student Amin Shams presents evidence that another cryptocurrency called Tether was used to purchase Bitcoin after market downturns, thereby propping up Bitcoin prices. Tether seems to be used both to stabilize and manipulate Bitcoin prices, the researchers say in the study. Tether was created by a crypto exchange called Bitfinex, whose executive strongly denies the claim. Bitfinex nor Tether is or is ever engaged in any sort of market or price manipulation. Tether issuances cannot be used to prop up the price of Bitcoin, so on and so forth. The University of Texas researchers tracked millions of cryptocurrency transactions last year and say that the patterns cannot be explained by investor demand proxies, and instead seem to arise through strategic use of Tether. What's more, the scenario brings with the possibility of huge profits for Tether creators, the study states. If Bitcoin prices increase and the founders can cash out of the acquired Bitcoins into dollars, likely at a slower pace and on an opaque channel that has less price impact than initial buying behavior. If the Tether issuers wish to legitimize Tether and avoid scrutiny, they can convert some of their cryptocurrencies to US dollar and provide dollar reserves for Tether. There has been a lot of criticism of Tether since it's come out. I'm not going to talk specifically about Tether, but Tether is sort of a really dodgy sort of cryptocurrency. A lot of people don't believe in it, and the fact that they're using that to manipulate Bitcoin, potentially, based on this research, doesn't really surprise me. The cryptocurrencies right now are a very unregulated space, and I don't necessarily mean government regulation, although that can come into play. I mean market regulation. Most of the market, first of all, does not invest in cryptocurrencies. Most of the transactions are speculative and not based on using the cryptocurrencies as an actual currency and an exchange of value. And there have been a lot of washing schemes that have been talked about by quite a few people. People will trade back and forth in a certain cryptocurrency to increase demand and drive up the price, really at no cost themselves, other than the transaction cost. But when you're dealing with, millions of dollars worth or large tranches of these cryptocurrencies, a few bucks on repeated exchanges to drive up the price, really it's just the cost of doing business. It's not much. It's a little fee more than anything. So that's one big reason. I think a lot of people are starting to come to the conclusion that the cryptocurrencies are mostly speculative in nature. A previous video I did quoted somebody that led a cryptocurrency advocate group, basically said he thought that 85% of transactions were speculative and only 15% were for legitimate actual currency purposes, people using it for currency or to exchange value. So it does not surprise me, with that 85% number, that as a little bit of confidence is lost, or as a scheme unfolds or unravels that was to bid up the price of certain cryptocurrencies, it falls back down. That doesn't really surprise me. And I think that there's a confidence issue with a lot of the public in the cryptocurrencies right now because it's in its infancy and it's not as well understood, and it doesn't look to be, it doesn't look to have a lot, look like it has a lot of backstops. It looks like it's very speculative and people really aren't sure about it yet. So I think there's still going to be a lot of rises and falls in these cryptocurrencies for some time to come. And that's just going to be the nature of the cryptocurrencies. They're going to be very volatile in their early stages. There's another article here on Quora which was talking about the crackdown from China and the crackdown for South Korea. So China pulled the rug from under its feet, I'm reading here, by banning all websites that offer cryptocurrency trading services in the country at the start of the year. So furious was a crackdown. The Chinese social media and search engines were cleansed of any mention of cryptocurrencies. It's like they're trying to erase it from the lexicon and the jargon of the country. And what's more, the country has banned anonymous trading accounts and underage traders from trading the cryptocurrency, with the Financial Service Commission claiming the government is considering shutting down all local virtual currency exchanges. We'll get to the Google point here in a minute, but South Korea basically also cracked down. Korean one. Okay, and while the South Korean's population makes only 0.67% of the world's population, its currency accounted for 10% of trade in Bitcoin. That's large, and was the number one currency for Ethereum transactions. In the face of all this, the South Korea confirmed crackdown on anonymous crypto trading in January this year. The market came down like a house of cards. New rules which requires traders to identify with their real names. So the anonymous aspect of cryptocurrencies are gone when you're trading in South Korea. The government's cracking down. Of course, I could definitely do that in the United States. There hasn't been any definite move towards that but there could be more regulations coming in the United States. I think that builds uncertainty into the cryptocurrencies and whether they'll be allowed to be anonymous. And people that use it for those purposes, like cash, to be anonymous, are going to continue with the cryptocurrencies. Another reason is that Google at one point banned the advertising on cryptocurrencies, following the lead of Facebook, which banned crypto ads at the start of February. So there's been sort of a silencing of cryptocurrencies in the United States, though not as strong in China and not as strong in South Korea. Of course, Google and Facebook, which are prominently in the United States but also reach many other countries, are also affecting global advertising of cryptocurrencies. And because only a few percentage points of people actually use cryptocurrency, in the studies that I did in my last video, it was somewhere between 8 and 13% of people actually use cryptocurrencies. When you're not advertising those constantly to get it out in the public conscious, and you're scrubbing that from search engines and popular social media, it's going to have a tamp down effect on continued adoption and growth of those cryptocurrencies. So that's another big reason why the cryptocurrencies have fallen. And lastly, here's an article from express.co.uk, which is a London, or not a London-based, but a UK-based newspaper. The cryptocurrency market, and I'm reading right here, continues to suffer a major blow this morning after a significant hack on the South Korean exchange rocked investor confidence. CoinRail, a popular exchange, was breached on Sunday, losing a predicted 28 million in lesser-known altcoins. The cryptocurrency market itself has lost more than 50% of its total value in 2018, with the likes of Bitcoin and Ripple losing 10% in the last 3 days. Bitcoin dropped to 65, 69, so on and so forth. Ethereum prices, so on and so forth. So this happened a little while back, not too far ago, but the hacking of the exchange, I think, has also tamped down on adoption of cryptocurrencies, and people may be thinking to get in, and maybe people that had a lot of altcoins in one of these exchanges, whether it be the exchange that was hacked or other exchanges. Certainly, this is not the only hack. There are tons of high-profile hacks of cryptocurrency exchanges that have happened, since Bitcoin has come out. You simply Google those and find a list. There's no need for me to go back over those. But hacking and stealing and theft of these cryptocurrencies is very rampant. So there aren't a lot of controls around the exchanges that have been effective in building a castle and a moat around these exchanges to secure people's wealth. So I don't think that people are going to look on cryptocurrency exchanges like they are banks, where they feel more comfortable with their money. Now, I just released a video earlier today as why you may not want to feel so comfortable with your money in the bank, your physical cash. But I think even given that and the legal issues I discussed with that on the banks and physical cash maybe not being as safe, I think the perception is still, certainly in a lot of the Western countries like the United States, that banks are still a stronger place to store your value in your money than in the cryptocurrencies. And I think that's probably still a little bit true, in that at least if you go to the bank, you don't expect it to be held up, your money stolen that way. There may be other ways in which the value of your bank accounts can go down, or you can have some issues getting it out. But the cryptocurrencies sort of have this wild, wild west perception around them in terms of the online exchanges and storing your wallet anywhere other than on a piece of paper in a safe in your home, which seems to be really the only safe place, and assuming you don't lose that piece of paper and lose all your cryptocurrency holdings. Anyway, I wanted to give a real quick update on the cryptocurrencies today. I've been noticing this trend in 2018. I've been doing some research. It coincides a lot with the concerns I had over this generation of the cryptocurrencies and the ledgers based on the blockchain that I'd previously written about. But I wanted to let this go for some time and let the news sort of develop before I came back and did an update on why in 2018 it's fallen, 75. The crypto 30 index has fallen 75% off of its highs on, I believe it was January 7th. Is when we saw the 20,000 index value. All right, guys, that is it for today. If you liked the video, please give it a thumbs up. Please comment, subscribe, hit me up on Twitter, argue with me, and tell me why cryptocurrencies are the best thing since sliced bread, and why you love it, and why you're piling all your money into it. And we'll have great conversations down there in the comments, as we've had on other cryptocurrency videos. Until next time, this is Rob on the Sui Juris channel.